So I remember when I first started investing and I was kind of scared because during the time there was actually a down market. Then I learned that basically, hey, when the market is down, it's kind of like Black Friday for us investors because obviously things are selling for cheap. And if we buy now, we will be able to capitalize and make more money later. And it kind of just felt like, well, whenever the market is down, that's when I want to go ahead and invest a bunch of money to basically make more money. And it sounds like a very good strategy until you find out that, hey, it's not like everyone that puts money into the market during bad times is actually going to make money. That's not what it's actually saying whatsoever. So in this video, there are 4 things I want to warn you about to make sure that when people talk about, for example, the great wealth transfer, put your money into the stock market, take advantage right now. It's the exact time. You don't want to be an idiot and you actually want to think these things through, because the best thing to think about is basically if you're talking about your real money and your retirement and your financial freedom, you don't just want to rely on, hey, I heard back in history that basically people make a lot of money during these times, so I'm going to go ahead and basically put a lot of money into it and see what happens. You don't want to take things by chance, especially when it comes to your financial freedom. So as always, guys, like this video and top by also subscribe and hit the bell so you get notified. And in this video, I'm going to give you 4 things to actually watch out for. And the first thing is, don't invest without thinking things through. Yes, it is very true that, for example, during the Depression, the Great Depression, a lot of millionaires were basically made because guess what? When the market goes down, it's true. Things, assets, okay, equities, they become very cheap to actually buy because when people sell, the price goes down. So if I think that those investments are still valid and I put my money into them, guess what? When the market recovers, I'm going to make a lot of money. But there is one point of this story that no one ever mentions, and it's basically it took the market about 25 years to get back to its previous highs. My point is, you don't know how long the entire thing is going to last for. So whenever you're thinking about putting money into it, remember, this can last a lot longer than 1 year. Can last longer than 5 years. Can last longer than 20 years for me to actually make a capitalization on my original investment. You got to be very careful. What I basically say is basically, okay, guys, it can take a long time to see your money actually multiply. You don't know exactly when the market is going to fully recover. No one does. Number 2, what should be the strategy then? If you don't know exactly when the market is going to recover, then how should you go about basically investing a bunch of extra money? The answer is my strategy is always very simple. Now, I choose to invest 10 to 20%. You pick a number in between that and you basically invest that for life. That's your lifetime number. So for me personally, I continue to do about 20% of my income. That is my number. So every single month, no matter what, whether the market is down, whether it's up, I'm going to do 20%. And I do that because we call it dollar cost average. This way, whether the market is up or down, I'm going to get the average over a year, 2 years, over the entire investment period. However, during times of great uncertainty, like times right now when the market is down, maybe when you watch this video, it might not even be down, but you're still interested in this topic. But overall, during great times of uncertainty and the market is down and I want to capitalize on it, I'm only going to invest the money I'm willing to put aside for a very long time, that I will not need for a very long time. That's my rule. And I won't say like an extra 10% or 20% because at the time, I could either have a lot of money to invest or I can have, for example, just a small amount of money to invest, okay? It all depends. Use common sense. Just make sure the money you put in extra is not money you're going to be wondering about when you're sleeping saying, geez, I really could have used that money for something else, okay? Now, number 3 is, don't be stupid and use common sense. A day may come when the hype is actually real. What I mean is this, okay? For now, okay, and I hope it continues to be that way, okay? For now, we are 100%. Every single market downturn has ended, okay? We have overcome it. Every Great Depression has basically been ceased in the sense that we have actually recovered. We've recovered from every single point, which is awesome. And it's actually a great track record. But you don't want to rely just on history because guess what? History, a lot of things happen every single day that never happened before, okay? The Great Roman Empire was forever. It did not last forever, okay? So you don't want to think that this thing goes on forever. And what I mean is this, okay? I strongly advise you to diversify. Now, yes, Warren Buffett, Mark Cuban, Charlie Munger. These are all great people when it comes to, for example, investing. And they all would tell you don't diversify. But you got to remember, the game they play versus the game the average person plays is very different. The odds that Warren Buffett or Mark Cuban or Charlie Munger are going to go broke is basically near zero, because these people have so much money collectively. It's a lot of money. And when they say diversify, they say, hey, if I know exactly what I'm doing, then the risk is actually mitigated, meaning the risk actually goes down. So I'm not going to just put my money into different things for the sake of just putting my money into different things, okay? It doesn't make any sense. In the sense of, like, if your career is stocks and you know exactly how to pick stocks, you're not going to put some money into a index fund because you know what you're doing, okay? There's no need for that, okay? You don't need to diversify into different things. However, for the average person that's basically just investing money for the stock market to make more money when retirement comes and to multiply and to grow and have passive income, great stuff. But you don't just want to rely on that, because again, we can experience a down market that can last 25 years or more. So imagine if you're thinking you're 60 years old, you finally got your retirement number in there, and now the market goes down by, for example, 50%, and now you gotta wait. The answer is that is a real possibility. So my advice is this. What I'm currently doing right now is, yes, I'm still investing my forever number into the stock market, which is basically 20% of my income. Now that might change at some point, probably won't though, but 20% is what I've set on right now. However though, I'm still saving up money to buy some real estate or, for example, a business, something like that, okay? Because this way I have cash flow that comes in. Now remember, now imagine this, okay? Imagine you have, for example, your stock market money. You have, for example, a good amount of money in there, but you also have like 3-5 properties that produce for you some cash flow every so month. Debt free, obviously. Guess what? If the market is down, no big problem. If you don't get paid rent this month, you still have the market, okay? You have two assets that provide for you income that don't necessarily actually correlate with each other, which gives you a lot more confidence in your financial standing. However, again, when you think Warren Buffett and all these big figures, remember, these guys are talking about billions of dollars, not millions, not thousands, billions, okay? If Warren Buffett lost 99% of his money, he will still be 100 times more rich than the average person watching this video right now. It's just a fact. So keep that in mind. Now, number 4, and the last thing here is, guys, what you invest in is massive. There's always the idea that, hey, Bitcoin is down, NFTs are down, gold is down, this commodity is down, this stuff is down, my individual stocks are down. It's a time for me to actually capitalize and put more money into it and make more money. My advice is, don't be an idiot, okay? Think things through. If something is worthless, okay, and it goes down in value, it doesn't mean it's cheaper. It's still worthless, okay? That's the idea. So keep that in mind. What I mean is, if you know for a fact that you can't calculate the intrinsic value of a company, which basically means what is this company's worth? And a company is worth the amount of cash it can produce in its lifetime, okay? So if you don't know how to run those numbers to find out exactly how much an individual company should be worth per share, then you obviously should not be investing into that company, because whether you buy it at $10 or $1, you still don't know what the value is. So it is not a good investment. It's not even an investment for you. So on top of that, if you're investing into commodities, into things that actually don't produce anything, like things like, for example, let's say like trying to do like Bitcoin or all this digital stuff that you can't understand, the answer is, understand that's still not an investment. So my point is, what you buy during times of uncertainty is still super important. If you're buying index funds, things you understand and comprehend, you're basically buying into the economy. You think the economy is going to do fine years from now, great investment overall. If you're buying into real estate, hey, real estate going down like 30%, 20%, whatever, right? I'm going to buy in right now because I believe real estate is going to be just fine in a few decades or so. Good investment because you comprehend things. My point is, make comprehensible investments. Don't just invest into things just thinking, hey, the price is down, I buy more, it goes up, I make money. It's not like that, okay? And I used to invest when I first started saying, hey, the price used to be a year ago $20, today is $30. Imagine what's going to be, for example, a year from now. The answer is the company could go bankrupt. If you don't know how to manage a company, well, not how to manage a company, you're not going to manage a company, but if you don't know how to value a company, then don't do that, because again, you're dealing with your real money. But guys, those are 4 main things that I try to avoid whenever it comes to the great wealth transfer. So keep those things in mind. Think things through and don't just go ahead and just dump a bunch of money. Here's the last thing I'll tell you guys for making it all the way to the end of the video, okay? The people that end up going broke during great times of uncertainty are not the people that take their money out. Okay, it's not just them. It's also the people that dump all their money in that they know they're going to need, and then the market extends, for example, for a very long time, and they need to basically take that money out before they can actually see any real returns. That's the idea. The money I have in the stock market is the money I have in there, and I'm not going to need to touch for the next decade or so. The money I have, for example, my real estate is the money that I have in there, and I don't need to touch for the next decade or so. So just make sure the investments you make, unless you're actually thinking about doing short-term investment on purpose, make sure, for example, you think long-term with this money. I would not go ahead and say, I'm going to dump 100% of my savings in the stock market because it's down right now if I don't know if I'm going to get it for the next 25 years. That's the idea, okay? Think things through. As always, guys, thanks for watching. If you made it all the way to the end of the video, comment down below I made it, so I know you made it all the way to the end. A great book on investing is called The Little Book About Common Sense Investing by John C. Bogle. It's a great book. And also A Random Walk Down Wall Street, which is also a great book. All right, that's it. Up here, another video. Over to my Facebook, subscribe. As always, Long Term Team officially out.